Hello and welcome, everybody. We are so excited to bring to you on our exciting podcast on stocks and crypto. And today we have quite a number of items on our agenda that we are going to discuss, but I'm going to allow my colleague here to lead and share with us the overview of what we are going to talk about today. And thank you for joining us again.
Thank you, buddy. So we're very excited about the discussion for today and some of the items that we have on the docket for today.
Yes,
I'm
yes.
going to repeat that. So, like some of the items that we have on the docket today, we're going to be talking about CPI data that was released this week. We had strong bank earnings. We're also going to discuss the Edinburgh reset that is shutting down. We're going to go a little bit into crypto and also talk about the economic outlook for next week and also the incoming US administration before we then jump into Q&A after the before we then jump into the Q&A session. So before we even jump into the CPI data, I think it's important for us to make the disclaimer that whatever we're going to be discussing here today, let me stop sharing. Before we jump into discussing about what is going on in the market, it's important to know that nothing in this conversation today is investment or financial advice. This is just two friends that enjoy talking about both the crypto and the stock market. So, and if you have not yet subscribed to our channel, make sure you hit the subscribe button and don't forget to like and also share this with your friend. And if you have any topic that you want us to discuss in subsequent episode, also leave it in the comment area below and let us know what you're excited about for 2025. So
That's
let's jump into what's going on in the market today.
fantastic. And I'm going to share a screen here so that we can see what's happening in real time. And just hang on for a minute. As, as
Yes,
you
let's
can
go.
see here, you can see that this is the S&P 500 index. Actually, this is the NASDAQ. So let
NASDAQ.
me go to the S&P 500 index. But before I go on that, I just want to share with you, if you can see here, that you can see that broadly the equities market, the US equities market is green. Even the German market, it was also green. You can see here the DAX is green. But you can see that the gold is also down, something that we have observed, right? But on the currencies, you can see that the currencies, some of the currencies, they are actually red. But in this case, the US is actually, if in this case, this pair, it means the US has appreciated and the euro has declined. So Bitcoin is also, uh, you can see it's up almost at 105,740. So that means, it's coming back to the all-time highs, and we are going to talk more about that. And big tech stocks like nvidia, Apple, they are also up, including our beloved stock, one of our beloved stock, Tesla. I have a Tesla bull in the room, so I better mention that. So this is something that we have seen over time to say, you can see this is a weekly chart of the S&P 500. It opened the week at around this level, right? You can see these are the dates here, but every day it has been going up because on the 15th the market opened at this level, almost 5,900 points, right? And then it kind of wobbled, but it was still above the 50 symbol moving average. I like to track the 50 symbol moving average. For me, it really kind of like helps me to see the momentum, right? You can see here it struggled to kind of like have an uptrend here. And for a while, I was kind of like, maybe the market is going to drop, which goes to say it's extremely difficult to know and to predict what's going to happen in the market, in the equities market, or whichever markets in the short term, because they are quite an array of other things, some which we have no control, or some of them, they are unknown. So at the end of the day, what I like to do as a retail investor is I like to balance the potential for growth and while also managing the potential downside, because a lot of people on average they lose money because sometimes they go too aggressive and mostly on stocks that don't have fundamentals or even other speculative assets without even the knowledge. So what then ends up happens is if the market drops like this, people tend to panic and sell. And the next day it opens up, right? And what then happens, you can see that today the market is actually up. Even like I said, if I look at the Nasdaq, it's almost similar trend for this week. It's up, right? Even the Dow Jones as well, which mostly represents the industrial stocks. And something that is interesting is that most of the stocks, some of the stocks, they are in the Dow Jones, in the Nasdaq, and in the S&P 500. But I like to just to track the S&P 500 as a barometer that I use to kind of gauge what's really going on in the market. I would like my colleague here to chip in, and I'm going to stop sharing here so that you can have a wider screen view.
Yeah, I think it's very important that this week we saw a bunch of data that was released. I think on Tuesday we had PPI, then on Wednesday we had the CPI data. And even before we got the data released, on Monday, I believe the market was red. And it just goes back to what we were saying before, that time in the market beats time in the market. Because over a short period of time, it's very difficult to really tell what the direction of the market is going to be, either it's stocks or crypto. But you just know that generally, if you stay invested in the market, it tends to go upward. And even before we got the data, we saw that the market was so red. On Monday, Tesla dropped as low as, I think, 380
390 something,
something.
yeah.
Yes, we saw the same thing for nvidia. Then we had news on Apple on, I think, Tuesday or on Wednesday, that the China sales declined. The iPhone was I think, the third largest in China. So again, it was just a bunch of not so good data for Apple, and we saw Apple went as low as maybe 220 something, but today is back to the 230s again. Again, what we're just seeing in the market is just telling us that the longer we stay invested in the market, the better opportunity we give our money to just work for us. And when the CPI data came out, it just gives us investors, maybe there's a possibility that we might have more Fed rate cuts, but that is not a guarantee. What if something comes up, we have a black swan event, anything can just happen. But it just shows that investors were very excited that at least we know that CPI data is going in the right direction. The trend is going in the right direction. And it's just, I mean, I just truly believe that this year is going to be an amazing year. So that's what I think. So
Yeah.
before we then continue this conversation, I also want to share. Okay. So let me put it this way. Okay, we've already done this one. So I think one of the other things that we saw this week was the strong bank earnings. JP Morgan, Morgan
Yeah.
Stanley, Goldman Sachs, all of these banks, they came up with really, really strong um um Q4 data saying that, hey, the financial sector is doing well. We did really well over Q4. And I just want to hear your take on this. Like, what do you think this means for, number one, consumers, and also for investors in general, Coach Isaac?
Yes, that's fantastic. I like to say that for me, I get some exposure to the banking sector by investing in exchange traded funds that track the S&P 500 index. But specifically to your question, I think most banks, they are more likely anticipating that the incoming Trump administration is going to do deregulation, right? And what that means, cut taxes, and possibly that might increase the corporate earnings, which on average have been forecast to be like to grow by about plus or minus, I think 7% per year. But of course, there are quite strong businesses that can outperform that. But on average, that there are some on top and some below that.
Mhm.
And what this means is that if the Trump administration, in my view, is going to do exactly what they said, maybe to lower the corporate tax to maybe below 21% and stuff, it means maybe they might continue to go up. Now, what usually happens is that the market is forward looking. the equities markets, to be specific. So if there are some headwinds, or if the banks disappoint, or maybe the incoming administration doesn't follow up or change on what the market had priced in, it might potentially cause the market to retrace or even to drop, because how the market functions is that investors, they're expecting the capital gains, right? Their capital appreciation, I would say, and then and it's based on their expectation. So if the expectation varies with the reality, that is what actually happens in terms of the policies, in terms of their earnings, or other unknowable or other events, then there's going to be a lot of volatilities on the investment cockpits.
Yeah. I mean, speaking of volatility, like how do you typically take advantage of the volatility in the market?
Yes.
Because yeah, it's good when the stock or the crypto market is going upward, but I
Mhm.
think one of the things that I've also learned from you, Isaac, is that
Mhm.
it's important to know how to make money, but when the
Mhm.
market is going up and when it's
Mhm.
coming down. So how do you edge or how
Yes.
do you take advantage of that volatility in the market?
Definitely, I would say that actually I have my portfolio is actually hedged. And by hedging, I mean if the market was to unexpectedly, I mean, nobody can really know when that would or could happen. There are some securities that can potentially spike up if the equities market drops. So I like doing invest ETFs. And
Mm-hmm.
even though they have a slightly some decay factor because they roll them over in relative to the futures contracts that they will be looking at, whether it's medium term or long term.
Mm-hmm.
And I like to do the ETFs that track the VIX index. But the thing is, you really have to know when to get in. I like to get in usually when there's extreme greedy and people are so excited. That means the equities market is kind of like going up, and then it's kind of like hitting all-time low, that is the VIX,
Mm-hmm.
because people kind of like for some time they have this euphoria that the market is gonna keep on rallying up. Other people, they do options. I've done options. I made some money, fortunately, more than I lost. But overall, options for me, they're quite complicated. So I like to kind of like hold shares, because
Right.
part of my portfolio, if I am right or if I'm wrong, I can kind of like hold if it's a small
Right.
position, maybe 5, 10, 15% of my portfolio, and I have a bit of cash, and
Mm-hmm.
most of the money would be, let's say, in equities. In that case, I'm not going to be worried if it drops. It's just a matter of only maybe once or twice if it spikes, right?
Right.
If it doesn't, that's fine. The equities market will take care of
Of the
the
yeah,
upside.
upside, yes. Okay. So like what do you think is the role of
Mhm.
hedging your portfolio in terms of, let's say you're
Mhm.
shorting a stock?
Mhm.
How important do you think that is to the market? The reason why I'm bringing this up is because
Yes,
this week we got the news. Okay, I'm gonna start sharing.
yes,
So this week we got the news that Edinburgh
yes.
Research was shutting down, and this
Mhm.
is one of the, should I say, financial institution, or this is one of the entities that I really, really read and also respect their opinions
Yes,
when they bring any matter to the table.
yes,
Maybe they bring something about a particular company or an institution, like 7 or 8 out of 10 times they're usually correct. And
yes,
this has been such a, to me personally, it's a big blow to the financial market because
yes,
why? I just feel like we need a lot of transparency and somebody still taking all of these big institutions saying that, hey, let's look at your numbers, let's look at how realistic this is. I'm
yes.
not saying that maybe the external auditors
Mhm.
don't do their job, they do, but sometimes
Mhm.
you always want this objective party to just look at
Yes,
a company and just give their own perspective
yes.
on this. So I just want to hear your take on this and if you have
Mhm.
any opinion on this.
Yes, yes. I think the market is good to have different players and for it to function efficiently, because there are some people who are betting that this stock is going to go down. That is the BS and the bulls. They are like, okay, Tesla is going to go up, for example. And in
Mhm.
the end, we end up having this market interaction that brings us to equilibrium,
Yeah.
disequilibrium. That means that volatility. Now, I would still say there are still other, financial, researchers or investigators that can still bring in some whistleblowing or some hit stories, so to put it, for
Mhm.
lack of a
Mhm.
better word, like Wall Street journals and many other
Right.
newspapers, because they have had newspapers are like stories that have really like exposed some of the things that have resulted in some stocks dropping. But having
Yeah.
said that, I really respected Nat and his team because
Yeah.
what they did, I think they usually had some extensive research, including even auditing and visiting the places, so that it
Mhm.
kind of like left little or no doubt.
Yeah, no doubt. Yeah.
Yes, but the thing is like it kept every business grounded in a way. So I think it's a concerted effort, but we still have SEC and
Mhm.
other regulators that can possibly enforce or even
Mhm.
ask for reviews or to just make sure that there's a fair playing field. But at the end of the day, in conclusion, I think it brings into perspective the importance of doing your own due diligence, because
Yeah.
if you do your own due diligence, then that kind of like give you some confidence, at least in my experience. But there are some things that you can just miss, or probably you could just be wrong. But if you are then right, like you have been saying, coach, on Tesla as an example, the market is going to then reward you because you by the time everybody says, oh, Tesla is a very good stock as an example. And by the way, this is not a recommendation to any
Mhm.
specific stock. I'm just giving as an example, or Apple is a very good stock, right?
Yeah.
People then want to get in there, and by so doing, they bid the prices up. And
Right.
similarly, then people say, oh, I think this stock, their financials, they are not good. There's something wrong there. Everybody wants to get out. So
Mhm.
at the end of the day, you should always do your due diligence. And that's why Coach Blooming and I, we like to work with clients and say, look, if you don't understand these things, or if you don't have the time to do this, we can do analysis for your stocks that you want to invest in and give you our own opinion, not as investment advice, but just to give you a different perspective in case you may have missed that or may not have time to do that on your own.
Right. Yeah, I think you did mention something very important in terms of doing your own research and be,
Mhm.
just do your own diligence on any stock or any crypto that you want to participate in. And even apart from that, I think one of the things that it's also important is the role of a mentor,
Yes.
somebody to just guide you and just say, hey, I've been here before. This is
Mhm.
what I would do. Because sometimes the capital market can be very exciting, but it can also feel overwhelming. The reason why we find this very exciting is because at least we have the educational qualification for this, and we're also practitioners. But for
Mhm.
people that maybe they don't have finance or economics or accounting background or any analytical background, that could
Yeah.
be a challenge. But that's why it's important to always at least do your own research. Then whoever you're comfortable with, reach out. And also, I always say that it's important to question things.
Yes.
Don't just believe anybody on the internet. Don't believe Isaac. Don't believe me
Yes.
that is talking to you. Because why? If you just believe everybody hook, line, and sinker, some point, what if the person makes a mistake? Then
Yes.
you just copy the person blindly. So I always say that it's important to do your own research, but also surround yourself with really smart people, people that you feel they are smarter than you, because you tend to be the average of the five people that you surround yourself most with. And it doesn't have to be somebody physical, it could be virtual.
Yeah. Yeah.
Majority of my mentors, they are virtual. They don't even know me, but they are my mentor indirectly, right?
Yes.
So it's just important to know that, hey, the market can be very exciting, but it's good to have somebody to also guide and just coach you along the line. So speaking of that, we also,
Mhm.
I mean, next week is going to be very, very interesting
Yes, for
because
sure.
we're going to be having the incoming US administration. But as exciting as this is, we as Canadians, we know that there might be some possible headwinds.
Yes.
Trump has been talking about tariffs, and I just want to hear your take on
Mhm.
that in terms of the impact on Canada. I
Yes.
think also earlier on Monday, Jensen posted on X about some new restrictions on high-tech AI chip to China and
Mhm.
how that could possibly be headwind
Yeah.
for also some tech stocks. Again, nothing that we're saying here is financial investment advice, but we're just showing that, okay, what could be the
Mhm.
potential impact of this maybe for Canada if
Yeah.
there's tariffs, maybe that's going to
Yeah.
affect our GDP or maybe inflationary
Yes.
effects. So I just want to hear your take on this.
For sure, for sure. I think for starters, tariffs are basically a tax that is levied on imports. So if you
Hmm.
are, for context, in this case, let's say we are just being hypothetical here, the US levies, a 10%, tariff on Canadian, maybe a blanket, uh, you know, tariff, maybe
Hmm.
10% on everything that they are importing from Canada. What that means in that case, I was watching Paul Krugman because I like to look up to experts who have done thorough research on this. And he was saying that from his research and his analysis, tariffs usually, if you are moving, you're looking at maybe 0 to 3%, tariff, right? They don't usually have a big impact. But when you start from 10 to more, usually the impact goes by the square of that tariff. Let's say now the Trump
Hmm.
administration increases the tariffs, let's say by 25%. That means we are looking at 625 billion
Wow.
impact, right? Yeah,
Wow.
according to Paul Krugman, is a very famous and Nobel laureate, by the way.
Hmm.
And what that means now, to unpack that, tariffs, they have the impacts, they come, they affect people across a different section. So in economics, we like to use what is called the policy matrix analysis. And basically, we are looking at the dead weight loss to say who are the losers and who are the winners, right? So now let's say Canada exports oil, mostly from Alberta to the US at a discount. What that means is now we are assuming that Canada is not going to retaliate. And usually it goes into what is called a tariff war. If Canada then,
Hmm.
let's say, levy 10%, then it kind of like neutralizes that. It's
Hmm.
not quite clear. But to simplify this, they are consumers, right?
Yeah.
People, let's say, who are consuming some things that are for gasoline that is being imported from Canada. What that
Yeah.
means, that price increase might be passed on to other sectors because gasoline is part of energy, is part of
Energy,
production.
agriculture.
Yes.
Yes.
So that means we might possibly see an increase in there in across those impacted sectors. By
Yep.
how much, it's very challenging to quantify unless now we see the exact like tariff that they will have. Maybe it's 10%, 15%, or no tariff at all, which I hope.
Hmm.
But now if then Canada now retaliates, that would be a different thing. But what I have been watching is that Premier Ford has been saying about, I think, 1.5 million people might lose jobs in that sector because the basics of economics, you have to balance your revenue and expenses. So if your expenses increase whilst your revenue is declining, it would make sense
Yeah.
for in some cases, to close that business, right? So
Yep.
if some people then lose jobs, then that might be in the short term. But I think at the end of the day, over the short term, that's what might happen, increase in prices, and there might be producers, consumers, mostly they are the ones who may receive an increase, a disproportionately increase in prices of the goods and services, right?
Hmm. Hmm.
And suppliers, they just in most cases pass it on, right?
Yeah. Yes.
To the consumers. So I think those are the challenges. But again, the reality of being in office and the reality of campaigning might be different. And I'm sure President Trump, he knows, having been a president of that highest office of the land in the
Hmm.
US before. So we will see but whichever news headline that I've been in Canada looking at, they've been saying it's important to take them seriously. I was listening
Yeah.
to a podcast by this head of KPMG, I think, and he was saying the first thing is you want to take this seriously if you're a business, and then find ways in the short term if you have been doing business in the US, right?
Yeah.
You have to find ways to kind of um, protect yourself. And
Yeah.
those things could be, some people, they were kind of moving some stuff, but there are limitations. There's so much that you can move, right?
Right.
Across the border.
Yeah, I mean the implication of tariffs or even the new restriction on AI chip to China. Majority of these things, again, it's hard to really say or quantify the impact, but just in general, if any form of tariff, if it's implemented, usually the consumer ends up paying more.
Mhm.
Usually it has some inflationary impact because things will get more expensive. Then hopefully there is no retaliation between the two countries and there is no trade wars because I mean we're neighbors, so we
Yeah.
need each other, right? So, but hopefully with the new incoming administration, maybe this is just for bargaining
Mhm.
campaign, or if it's just to have something to bargain on and say, hey, if you do this, then there will be no tariffs. Maybe, but we can't tell. But maybe from next week we can see a lot of things that will start unfolding, and only time will tell if this is going to be good for Canada or not. So,
I was
but
going to ask you, Coach, now in the Canadian
mhm,
equities market, if this was to happen, uh, I'm just waiting to see and just researching quite a number of stocks, actually
mhm,
including in Canada, to
yeah,
say, because in times of uncertainty, when people sell off, you may
yeah,
potentially find wonderful businesses. Are you potentially looking at stocks to
in
consider
Canada.
investing in Canada?
Like, I think my first love is still the US, and it's still the US.
Yes,
I did mention, I think maybe two the last week in 2024, I just told myself I exited my last Canadian stock.
yes,
And that's only because I think as a capitalist that the US market is a more robust and it's a bigger market,
yes.
and I prefer
It
to
is.
play there. It doesn't mean that the Canadian market is not strong or is not going to do well. I'm just comparing the US market and the Canadian market, and
The
I just
returns.
think that my capital is going to work much harder for me with bigger returns in the US compared to the compared to the
Yeah.
Canadian market. But that's just my own personal take. Even apart from that, even when I invest,
Mhm.
try to make sure that I'm excited about the company. If I'm not excited, I won't have the energy or the drive to keep abreast with what is going on in the company. And
Mhm.
that's one of the things that I tend to look at. But if I don't want to stay abreast with what's going on, maybe just an index fund or ETF would just do that. But for me, because of my risk appetite, I prefer the US market. There's nothing wrong with the Canadian market, but I
Yeah.
just know myself as an investor, I tend to like the US market more. It's a bigger market and the returns tends to be much better there.
Mhm.
But
Over
that's
the
just
long
my
term.
own,
Mhm.
yes, that's just my own personal take. But who knows? I could be wrong. There's some really, really strong Canadian companies here too, but I'm just too biased. US is still my first love for some reason. So
Yeah.
the
Yeah.
but yeah.
And that brings me to another point I wanted to mention, because I was looking to Professor Segal on this
Mm-hmm.
podcast, and he was talking about the high valuations in the market, the Shiller Cup ratio. Basically, it's supposed to be around 18, I think, for the S&P 500. And each time that it has been above that, it has tended to drop. And it, and the professor was saying, look, most of the US companies, they've been bringing back home bacon. They've been beating earnings. So,
Yes.
which is good. Now,
Yeah.
they're still a high valuation. But at the end of the day, I think for me as an investor, what I want to be doing is to make sure that I have a huge margin of safety. To say,
Mm-hmm.
even if, let's say, Tesla or whatever stock that I'm holding drops by 40, 50%, to if there's a bear market or a correction, would still be green. Otherwise,
Yes.
if I am not, then it's a little bit dicey. But also, if I have a long-term time horizon, 5, 10, 15 years, right? That
Yes.
might be another case. And there was a decade in the US when the returns were kind of like negative, right?
Mm-hmm.
Even
Yes.
near zero for the S&P
Mm-hmm.
500. It doesn't mean that there were no other stocks that were really doing well,
Doing well, yeah.
right? So that's the importance of having broad diversification in sectors that you understand. And
Yeah.
another caveat that I wanted to just add on was that by saying I like to stay invested in the market, time in the market, trying to time the market. The idea is, for me, it makes sense only if it's a company that has strong fundamentals. If it's
Yeah.
that company that doesn't have generating profit, that is a high cash burn, most likely it's just going to go under. In other words,
Yeah.
declare bankrupt. So I never want to hold for the long-term stocks that are not, profit businesses that are not profitable. So I like to look at the bottom line, the financials. Those are the facts for
Right.
me, and then just
Right.
capturing if there is a huge drop that gives me a margin of safety, and then I
Mm-hmm.
just let the money compound over time.
Yes. Yes. I think just one thing before we jump into crypto this week. One of the things I also want to point out is that we're seeing that the US market is such a strong market compared to other market. And I think that we're going into an age of productivity because of artificial intelligence. A lot of things that we saw the ChatGPT moment in 2022, a task that would typically take maybe 2 hours, 3 hours, or even some days to figure it out. You can use these productivity tools and it makes our lives easier. I truly believe that yes, we're going into an age of increased productivity, and that might make up for a lot of maybe dead weight that we're supposed to experience in the market, maybe some declines that we're supposed to experience. But because productivity is so high, I
Mhm.
expect the market, again, I could be wrong. I expect that the US market or just the market in general will benefit from that tailwind effect. But it's also important to know that it's important not to bet against innovation.
Yes.
It's important to know that, okay, when the tide shifts, when something fundamentally shifts about a sector, it's important to be able to read that. The reason why I'm saying that, we saw the example of Blockbuster and Netflix. Again, we saw the example with Amazon and Barnes and Noble. There's always that shift that happens in the market, and as a smart investor, it's important to understand the times and the seasons to know that, hey, I'm not going to be putting my money in this sector because this might be a dying sector. But that's just my own take on that before we then jump into crypto. I don't know if you want to add anything before we go into crypto.
No, coach, I think you can go on to the crypto, which has been interestingly back
Yeah,
in the news now.
I know. Just this week on Monday. So what happened in crypto this week?
Mhm.
Just this week on Monday, I think Bitcoin went as low as 91, or it dropped a little bit under $90,000 this week.
Mhm. Mhm.
And today, Friday, it's already $105,000.
Yes.
And maybe this is because of the incoming administration. And based on what we're hearing, because this could be wrong, based on what we're hearing is that there's going to be a lot of executive orders on crypto when Trump gets into the office. The adoption in terms of things that are friendly to the crypto sector. Again, these are just signs that
Mhm.
the era that we're going into, for those that can position themselves strategically into this, we're going to be rewarded handsomely. The other thing that I also want to point out is we're getting a new SEC chair. Gary Gensler is going to be resigning on the same day that we're going to be having Trump inaugurated. And this is very, very exciting because the previous administration has been so anti-crypto. A lot, I mean, I was listening on CNBC just this week, and all the things that Gensler was just saying that he doesn't own any crypto. And I'm like, oh, dude, you taught at MIT. How come you're teaching something you're not a practitioner of? Like, but I'm just excited that we're gonna be getting the new SEC chair, Port Atkins. So, which is exciting. Again, just this week we saw a lot of inflows, 307 million net inflows into Bitcoin and Ethereum ETFs. ETF is just a way that you can still participate in crypto necessarily without necessarily owning the underlying asset, meaning that you don't own Bitcoin, you don't own the Ethereum, but you get some exposure to it, meaning that if Bitcoin is doing well, we expect that the ETF too is going to do well. A lot of people here believe that crypto is very complicated, which is understandable. But a simple way to get exposure to Bitcoin or Ethereum or to the crypto market will be to just go into the Bitcoin or Ethereum ETF. Again, this is not investment or financial advice. I'm just sharing that, hey, this is what I
Yeah.
would do if I were not if I don't have any exposure to Bitcoin. On Monday, I said before that we saw Bitcoin went as low as 80 something, I think $89,000 plus. It dropped that low. And that's also because the DOJ approved the sale of 6.5 billion Bitcoin, which was seized from Silk Road. Again, Silk Road dates back to when the beginning of crypto exchanges. A lot of people were still trading on this crypto exchange. But a lot of Bitcoin was seized, and those Bitcoin are still being with the US. But now the DOJ has already given the approval that, hey, you can sell this. And what does this mean? If you're selling all of this, it just means that you're going to tank the price of Bitcoin. It's going to make the price of Bitcoin to drop. And that was what we saw on Monday. But we don't know if they're eventually going to do this given the new administration that is coming in. But as we wrap up this, price target for Bitcoin by the end of this year, which I could be totally wrong. This is not me saying this. It's just some analysts saying this that, hey, we might go north of 200,000 American dollars.
Mhm.
But even if we don't get to this, maybe we get to 150, 180, it's still better than where we are today. And that's
Mhm.
just some of the exciting things that is just going on in the crypto and also in Bitcoin. Again, in as much as we're very excited, or in as much as I'm very excited
Mhm.
about the crypto market, I truly believe that as a smart investor, it's good to have some exposure into the space. The reason being that the new administration that we're going to be getting is pro Bitcoin, is pro crypto. I was reading some news that a lot of states in the US they are having their own Bitcoin reserve, their own strategic Bitcoin reserve. Also, we're going to be getting a lot of executive orders 100 days into the new administration. We don't know what is going to be developed, but these are just exciting news that are going to be coming up. And I just feel like, yes, crypto can be very exciting, but I also want to say that it can be very risky, it can be very volatile, and never invest what you cannot afford to lose because crypto is exciting. Your money can go to the moon, but it can also go down to the toilet.
Yeah.
Don't fall into the category and say, oh, Bloomy said I should put my life savings. No, I didn't say that. I just say that I'm just saying that it's important to have some exposure into crypto, into Bitcoin as a long-term investor. So that's my take on crypto this week. If you
Yeah.
have any question, comment, leave them in the comment area
Yeah.
below. We want to read from you. So before we wrap up today's episode, do you have any economic outlook for us, Coach Isaac, that you want us to talk about, or we can just go straight into the Q&A?
I think I will quickly talk about the data that we mentioned, right? The numbers, they were good. The US economy, in brief, is actually, I would say Biden left a very strong US economy as indicated by the job numbers. and also the GDP that has been growing, but also China's GDP, I think it grew by
Yes,
5.4%
5.4. Yes.
for this most recent quarter. In other words, it's growing.
Mm-hmm.
And what that means is the businesses that are in that economy, they are actually growing. Now, in terms of my outlook, I think at the end of the day, we have said this. When I'm investing as a retail investor, I want to do things that make me sleep peacefully, right? So it's extremely difficult to predict the market. But what I've observed is that dollar cost averaging in the stocks that you understand or businesses that you understand, that's good. I have very limited exposure to crypto because I don't understand it that well. And I hear you, coach, what you have said. And I think at the end of the day, right, if the US market is going to go up, the equities market, I can still make money in that regard because I
Yep.
understand that I trade in the equities market. And
Mm-hmm.
at the end of the day, if the incoming administration is going to execute on things that they have promised to do, I foresee that the equities market is going to go up. Now, the caveat that I always want to put is if there is any variance to what they said before coming into office and the reality, right, that might potentially result in the Fed maybe reversing the trend of reducing interest rates. And what would that mean? It would mean that the equities market might potentially drop. And usually when that happens, people might panic, sell. And what is it that I will be doing in that case? I will be excited because at the end of the day, time again and again, if you
Yeah.
invest in wonderful companies that have strong fundamentals and you kind of like you are right in terms of which is extremely difficult of
Mm-hmm.
how you see the future and you invest, then that's a good thing. If you have a hedged portfolio, then that
Yes.
means you're gonna make some money. Now, that being said, I we could potentially see the equities market continuing to go up. Why am I saying so? We spoke about deregulation, about the strong economy, but the market will always vote, right,
Yeah.
after the executive orders are said. In other words, it might vote thumbs up or
Yeah.
thumbs down. If
Yeah.
that's a thumbs down, then that means the market is gonna tank in the short term.
Yeah.
So, but if it continues to go up, it means my position in the equities market will be
It's
smiling.
gonna do well. Yes.
It's,
It's gonna do well. Yeah, that's very interesting, Coach Isaac. So, let's jump into the Q&A. You're good with that, right?
yes, sure.
Okay. Okay. So the question that we have for today, what's one mistake you've made in the stock market, and what did you learn from it? I can start. Maybe I can start with crypto.
Yeah.
What mistake did what is one mistake that you've made in the market, and what did you learn from it? So for me, for crypto, I'm trying to think of a good mistake. I think just not buying more.
Yeah.
That's just my own take. Like when Bitcoin was still 20, 30, 40, not just buying more. And that's just me saying this in hindsight because now that Bitcoin is over $100,000, yeah, I can say that. But
Yeah.
it's just buying more of the quality crypto because Bitcoin is something to own and hold for the longest time as possible. But it's just me not buying more. That's just one of my own mistakes. Yeah. So yeah,
Yeah.
but now that I've also I think one of the other things is also to know when to exit the crypto market
Mhm.
because the crypto market we go into this 4 year cycle and the winter in crypto, like crypto winter can be very, very brutal. And it just means that understanding the crypto cycle, the 4 year cycle to know that, hey, how long is the bull market going to be for? And how long is the bear market and how long would the bear market potentially be long for? So it's just important to know that, hey, when we're in a bull market, the bull market doesn't go on forever. knowing that, hey, I'm going to take my profit and I don't have to hold this for 5, 10, 15 years, 20 years. The only caveat I have to that is for Bitcoin, but any other crypto, no, I'm not holding nothing for the long term. I just knowing that, hey, in the bear market, I should have sold some of the crypto that did really well in the previous bull cycle. I should have sold. But aside from that, those are the two things that I've learned in crypto so far, or the
Yeah.
mistakes or the lessons. So over to you, Coach Isaac.
Thank you, Coach. For me, it has been the fact that I should only stick to things that I understand. I trade in the stock
Mm-hmm.
market and I have methods so far that have been working, right? Whether the market is going up and down, but it's mostly through observation. And there's
Yeah.
always this temptation to say, okay, maybe there's this stock that's going up. Maybe let me go into crypto because maybe I can apply this. But I like to back test my data
Yeah.
because, oh boy, you can get, like
Correct.
killed because what happens is that if you don't understand, it's like you said the other time, psychologically, you will be like, oh boy, it's going to continue going down. So I like to just stick to few stocks. Maybe there will be 5 stocks that I trade and I monitor them. I just wait. And fortunately, what I've seen is that they tend to go up and down within certain ranges that I understand, right? To say, okay,
Mhm.
for me, I think it's time to get in, and then I get out, and then sometimes I just go in and then exit, enter into the other because I have seen the causality. Now, the second lesson that I will say in conclusion is that I don't want to use the margin account like to borrow because I've seen that once you are using the margin account to trade or to invest, the odds of winning in that are quite low because if something happens that's beyond your control, what that means is your equities is going to, your position is going to drop, and you are more likely going to get a margin call, and you are going to be forced to sell at a bottom. So you have the loan because basically it's a loan that
Yeah.
your broker extends to you. Let's say you borrow 10,000 and then it drops to your equities position drops by whatever percentage. But now that requires them to say, hey, you have to sell within the next hour or so. Otherwise, if
Mm-hmm.
you don't, they will just do it
They'll
for
do
you.
it.
So you take that loss, plus
Mm-hmm.
you still have to pay the interest and the
Mm-hmm.
principal for what you will have borrowed. So
Right.
I've seen that for me, if I am able to make, let's say, 5, 10% on my capital that I have, but the truth of the matter is Coach Blooming and I, we have been in the market for some time and saving quite aggressively. So it's good to kind of like get those small returns. If I can get 5, I can grow my account by 8% every
Mm-hmm.
month. That's
Mm-hmm.
exceptional because at the end
Yep.
of the year, you multiply that by 12. 8
Yep.
by 10
That's
is 80% plus 24.
yeah.
That's
Yeah. Yeah.
it,
It's a good return. Like, let's just put it that way. It's a good
yes,
return if you can compound your
yes,
money that aggressively every month. Yeah.
yes. Yeah,
So I
it's
think
exceptional.
yes. And I think that the just to wrap up, the market has a way of teaching us one or two
Yeah,
things, but it's so much exciting when we learn this thing because we are practitioners. And I always like to say that it's okay to learn those lessons when you're still managing maybe $8,000, two
yeah,
thousand, $10,000, not when you're making the same mistake when you're managing 100 grand, 250 grand,
yeah,
500,000, $1 million, Deca
mhm,
millionaire, right? So it's just
yeah.
important that, yes, that we're learning this thing even as we grow our portfolios over time. So we're going to be wrapping up today's session. And I was just wondering, do you have anything to say to our audience before we say we'll see you next week?
I think I would just say to our audience, always educate yourself, right?
Mm-hmm.
Trade and invest wisely because, at the end of the day, you want to uh, manage your risk by just doing your own due diligence, like you said.
Yeah.
If it is too good to be true and someone says, oh, I'm going to return 20, 30%, if making money was that easy, then everybody would have been rich, right? So I
Yeah.
like to always ask questions, and fortunately, I get to manage our money. So I like to be accountable and honest to myself to say, realistically, how has been my return been so far? Is this a good thing that I'm managing the money, or maybe I could give it to the financial advisor? So far, it's been good. Uh, or maybe there are other ways to just do that. But at the end of the day, I think it's good to stay invested in the market, to stay informed, but also to um, ask or to reach out if you have any questions to any of us. Thank you so much, Coach, for leading the session.
Yeah. Thank you so much, everyone. And don't forget to subscribe to our channel. And if you have any question, comment that you want us to address in our upcoming um episode, leave it in the comment area below. And until then, may the market be in our favor, and we'll see you next time. Bye-bye.
Fantastic. See you soon. Thank you.
Mhm.